Well, good afternoon, everyone. Welcome to our third Thursday at 3, at least if you're in the central time zone. I am Brendan Derone, CEO with E4 Insurance Services. A few housekeeping things. This webinar is set up so that everyone can interact with each other using camera and audio. You can start by staying on mute. It is up to you whether you want to have your camera on or off. If you want to ask a question, please use the hand raise or reaction button on the top of the toolbar, come off mute, and put your questions in the chat box. Today's third Thursday at 3 will be recorded and posted in our Marketing Central on our advisor portal and E4 YouTube page. Inside Stream, a smarter premium finance approach. Tax-free retirement income using other people's monies. It's not too good to be true, and today we'll show you how. Richard DeSantis, CEPA and Director of Internal Sales at Stream, is here with us for a deep dive into Stream, a unique no-collateral premium finance strategy that helps high-earning clients build significant pools of tax-free income through leveraged life insurance. As many of you know, this time of year is all about the NCAA basketball tournament where preparation meets opportunity and where the smallest advantages can make the biggest difference. Teams don't just show up and hope to win, they rely on strategy, discipline, and the right support behind them to stay competitive through every round. That same mindset applies to how we approach financial solutions in the insurance space. At E4, we see premium finance as part of your starting lineup with Stream. Our partnership role is to help advisors and their clients stay in the game by improving cash flow, simplifying payment options, and creating flexibility when it matters most. Just like a well-executed game plan, premium financing isn't just about covering the basics, it's about positioning your clients to perform at a high level. Personally, when we connect that to E4 Insurance Services, the value becomes even clearer. E4 is about enabling efficiency, empowering relationships, enhancing growth, and elevating outcomes. When combined with Stream's financing solutions, you get a more complete playbook, one that helps you serve your clients while strengthening your own operational value. Think of it like advancing through the tournament. Each round requires sharper execution, better coordination, and trust in your teammates. Stream and E4 work together to provide that support, helping you navigate challenges, capitalize on opportunities, and ultimately come out ahead, unless you're the Badgers, and then that didn't work out so well today. Over the next few minutes, and for anybody that was watching the game later, I am sorry to spoil it. Richard is going to walk through how these solutions come together and how you can leverage them to create winning outcomes for your clients and your business. With that, let's get started. Richard, I'm going to hand it over to you.
Thanks so much, Brendan, and appreciate everybody taking the time out of their day to walk through our strategy together. I'm going to share my screen and walk you through the presentation. While I'm going through the presentation, if anybody has any questions, feel free to unmute your mic, ask the questions. I would love for this to be interactive. Otherwise, I'll open it up for some questions at the end, and we can address all of them after the presentation. All right, can everybody see my screen okay? Perfect. So again, my name is Richard DeSantis. I am the Director of Internal Sales here of Stream. I have been with the company for a little over 2 years now. A little bit of a background on myself. I've been in financial services since 2006. Spent the first almost 14 years of my career in private banking, wealth management, and then 5 years as an independent financial advisor before joining here at Stream. What we are is a small case platform for premium finance life insurance. So what I'm going to go through today is a little bit of a background on our company, how the program works, and all of the key benefits. I'm going to go through our different sales verticals. These are really ways for you guys out there in the field to identify good fits for the Stream plan. Then I'll walk you through a couple different case studies to paint a better picture for everybody, and then give you some sneak peeks into our agent portal which allows you to run your own cases, collect all documentation from the client via DocuSign, and go straight into the actual application with the insurance carrier. So what Stream is we are pairing Index Universal Life, so that is the chassis of our program. And what Stream is doing is we're marrying the relationship with the bank to get funding and the insurance carrier's IUL program. Unlike traditional leveraged life insurance or traditional financing of life insurance, we have a lot of different nuances with our program. And really, we eliminate all of the pain points that clients typically have to jump through. So in traditional financing, clients that would need to meet a net worth requirement of at least 10 million in order to qualify, they would be going out to the banks themselves, applying for the loan and personally guaranteeing that loan. They would also be posting collateral to cover any shortfall between the loan premium from the bank and the cash value inside the policy. So there's a lot of different hoops they have to jump through. And typically the transaction can take somewhere between 6 months, and I've seen it take upwards of 2 years from start to finish. What Stream has done is we've eliminated all of those hoops that the clients have to jump through. And we've also opened the door for more individuals to be able to participate by lowering the minimum barrier of entry or the threshold. The policy design is an overall 10-page design from the bank, and the client or your clients are only responsible for paying a portion of the premium for the first 5 years. We have 3 different age brackets when it comes to the amount of leverage that we can bake into the strategy. I'm going to use $100 total premium being into the policy for 10 years by the bank. If we had a client age 50 all the way up to our max age of issuance, which is 60. So from 50 to 60, clients are responsible for 50% of the total premium or $50,000. The bank will match that $50,000 for the first 5 years and then pick up 100% of the premiums in years 6 through 10 or $100,000 each year. Now, the younger you are with our program, the more leverage that we can bake in. So if you now have a client in their 40s, they're going to be responsible for 40% of the total premium, or in that $100,000 case, 40,000 would come from the client for the first 5 years. Bank would put in 60,000 for the first 5, and then 100,000 in years 6 through 10. And then our last age bracket is anything under the age of 40. So age 39 all the way down to newborn. Yes, we can do this on juveniles, which is one of our sales verticals, and I'll touch on that in a bit. But they would be 30% out of pocket, or 30,000 from the client for the first 5 years, 70,000 from the bank for the first 5, and then banks again going to pick up 100% of that premium in years 6 through 10. Key things to remember here is we never require the client to post collateral, personally guarantee the loan. So there's no credit reporting. They're not filling out the loan application themselves. All they have to do financially is qualify and pay 5 years of contributions. Different types of designs that we can do with Stream. I would say 80 to 90% of what we're running and what we're placing in force for clients are around the retirement income design, where they're going to build those pools of tax-free income. But we can also do this on a death benefit only design for your larger estate planning cases or legacy cases, both on a single or a second to die chassis. One of our other nuances is we can accept 1035 exchanges into the Stream plan. And depending on the size of that 1035 or that cash value that's moving over, that can either just be an additional dump in of cash where the client is looking to leverage up and still pay those 5 years of contributions. Or depending on the size of it, it could take up a portion of their 5-year contribution or cover it in its entirety. Really, Stream has done all of the back-end work and all of the heavy lift for all of your clients, where their true financial responsibility is just paying those 5 years and then they're done. Stream is the one that's going to be backing these loans for the client. Therefore, we are the ones that are going on the loan application. We're already pre-approved with the 5 different banks that we use for our funding. So they are ready to fund these policies once we fill up a tranche. So we're pooling investors together to form what we're calling a tranche. What that means is, because there's going to be a lot of smaller policies and not one large ultra high net worth individual applying for $1 million plus of premium, we're pooling 10, 20, 30, 40 clients together to make it look like we're asking for one large loan with the bank. That way we can get preferential bank rates and clients are not having a person to guarantee those loans. This is our minimum barrier of entry. So the minimum client profile in order to qualify for participating in Stream. We call them Henrys of the world, high earners, not rich yet, or an accredited investor. So what that means is if you have a single individual, they need to earn at least $200,000 of income. Or if you have a married couple, they need to have at least a combined income of $300,000. If they don't quite meet the income threshold and have at least $1 million in net worth, excluding their primary home, that would also qualify them for our program, as long as they have some sort of liquidity on those assets. Again, we can do this from ages newborn all the way up to age 60. Once you hit 55, between 55 and 60, the income designs typically become less attractive due to the waiting period on how long it takes us to pay back the loan to the bank, which is around 12 to 15 years. So if you had a client in their mid 50s, they're going to be into their early 70s before they'd really be able to start taking those income distributions. So it's not going to be as attractive. I would say 55 and older, we should really do this more for a death benefit design. Now I'm going to walk you through our Stream opportunities or our sales verticals. These are all going to look identical on an illustration, but these are just ways that you can identify good fits or client profiles for when it comes to participating in Stream. And we've dubbed names for all of them to make them a little interesting. We have case studies on all of these that we can send out, marketing materials. So whatever you guys need, just let us know. First one is live stream. So this is those Henrys that we're talking about, where we're doing that retirement income planning, doing it or for the death benefit design, both on a single or a second to die chassis. Then we have BizStream. So this is where we're working and focusing on business owners. Business owners absolutely love this program for a few different reasons. Number one, if business is in growth mode and they're looking to get additional funding for their business, Stream or the bank loan, because they're not personally guaranteeing it, is not going to prevent them from going out to get that additional funding for their business. Some of the types of planning that we can do with these business owners in Stream: buy-sell planning, deferred comp, key people, key person, key man insurance. Buy-sells are typically funded with cheap and expensive term. Most of them that I've seen, they're going for that 10-year term and then renewing them. Doesn't allow for any growth within the business. So if the business valuation is going up, they're going to have to apply for more term insurance to cover that full buy-sell. But by putting a little bit more into a permanent policy like Stream, funding a little bit more out of pocket than that term policy, with our design, we have an increasing death benefit that's going to allow for some growth within that company. Number two, if the clients or the partners in the business don't pass away, which is hopefully the case, they can then bonus the policies out to themselves tax-free and start taking distributions in retirement for no taxable event. Basically setting up a self-funded retirement or deferred compensation plan for themselves. GenStream, this is the third one. So this is where parents or grandparents want to do some planning or generational planning on their children or even grandchildren, both under the age of 18 and over the age of 18. So the parent or the grandparent is who we would be qualifying on the asset base or as that accredited investor. The child, whether that's an adult child or a minor, those would be the insured on the case. For this particular vertical, anybody under the age of 18, that's going to be the insured, and we're qualifying a parent or grandparent, we can go as low as $5,000 a year out of pocket or a total commitment from the client of $25,000. For anybody else qualifying on their own, age 18 or older as that accredited investor, our minimum contribution for 5 years is $20,000 a year or a total commitment of $100,000. We also have no maximum on how much somebody can contribute as long as they can financially justify it and qualify for the insurance. The fourth one is MedStream. So this is where we're working with medical professionals, doctors, nurses, dentists, physician assistants, being severely delayed in saving for their retirement with all the additional schooling that they go through, having to pay off those student loans once they get into their practice, also being familiar with leverage. This is a great way for them to get into a policy and play up catch up by only having to fund into that policy for that short 5 years. The last one, which is becoming more and more popular now, is for athletes. We are going to dub that one Champion Stream. This is where athletes can now participate in the stream plan and really help protect against those shortened careers, on possible injuries, or just getting involved and not being financially educated properly. This is a great way for them to protect against the back end of their careers. We have already had a few NFL players participate in stream, NBA players, NHL, and we're also now working on a F1 driver. Now I'm going to walk you through a few different case studies, and then again, I will touch on the portal real quick, and then we'll open it up for some Q&A at the end. But again, if you guys have questions while we're going through this, please feel free to unmic your mic. This is an example of the beauty of utilizing leverage to your advantage with the stream plan. So this example is assuming a 40-year-old male, comparing him going out, purchasing a life insurance plan, an IUL with a carrier, and funding $25,000 a year for 5 years, or committing a total of $125,000. Showing you what that would look like if he bought the policy solely out of pocket with his own money, or if he took that same $25,000 a year and paired it, used it to leverage with Stream, bought that same exact IUL, what that would produce for him from a death benefit and an income standpoint. So day one, 40-year-old healthy, $25,000 a year for 5 years. That would buy him an initial death benefit, not utilizing leverage, of about $414,000. If he designed the policy from an income standpoint and turned on income for himself at 65, be about $37,000 a year tax-free he'd be able to take out of the policy. God forbid he passes away at age 88, he would have distributed about $856,000 out of the policy tax-free and still have about $214,000 for his beneficiaries. Now, with the beauty of utilizing Stream, and again, not having to personally guarantee that loan, but being able to take advantage of utilizing other people's money, bought the same exact IUL, funded the same $25,000 out of pocket, he's getting an additional almost $900,000 of death benefit day one. Not only is he getting more death benefit, but he's getting more cash that's going into the policy, because that $25,000 as a 40-year-old is going to represent 40% of what the total premium going into the policy would be. Therefore, with the more cash going in, he's able to distribute more cash coming out. Age 65, his income goes from $37,000 to $82,000. Overall, if he lives to age 88, that's an additional $1.1 million of tax-free income he's able to take out. So almost $2 million coming out, as well as additional of almost $500,000 of death benefit. So pretty significant numbers to utilize other people's money to your advantage. And again, remember, clients are never on the hook for the loan, nor are they personally guaranteeing it or having to post any collateral.
Richard?
Yep.
There is a comment in the Q&A or a question. How does a teenager or an infant meet the income threshold?
Great question. So in that case, if they're under the age of 18, obviously they're not going to meet those requirements. Or even if they were over 18, for instance, let's just say parents, or let's just use myself. Let's say I'm not an accredited investor, but I'm 35 years old, but my parents are accredited investors, or my grandparents are accredited investors, and they want to do these policies for me. We would utilize their assets and their income or net worth to qualify. I would just simply be the insured on the case. So for instance, if you had a teenager or even somebody under the age of 13, 1, 2, all the way up, they would just be the insured on the case. We would verify assets of either the parent or the grandparent, whomever is going to be the one funding the policy.
And Richard, related question we've talked about in the past. Under 18, how do we satisfy the insurance carrier's insurable interest for doing a large death benefit, yet they don't have the income?
Great question. So the parents would need to have 1.5 times the amount of insurance on themselves that we are applying for on the child. So for instance, child has $1 million initial death benefit on the policy. Parents combined, if it's mother and father, or if it's just single, they would need to have at least 1.5 million on themselves or be uninsurable. If a grandparent is doing this on their grandchild, parents would still need to have insurance on themselves. They're not going to require the grandparent to have the insurance, but the insurable interest there is it's their grandchild. They're doing some legacy planning. And we have tons of grandparents that have participated in the program. We have one that did it on all 7 of his grandkids. I'm working on a case right now where grandparent has 12 grandkids, then we're doing this on all 12 of them. So we have probably, off the top of my head, 60 or so juveniles that have participated in this plan thus far.
Awesome.
What you're looking at on the screen is the finance ledger of that case that we were just talking about with Stream. So 40-year-old male contributing $25,000 a year for 5 years, which is column 4. Column 1 is what the bank is going to put in on behalf of that client, which is 60% more, $62,500 for 10 years. Typically, again, loans are paid back to the bank somewhere between years 12 and 15. In this case, it's year 13. And the way that we typically pay these loans back to the bank is we now take a policy loan on the existing cash value of the policy. We're not physically withdrawing the cash from the policy, so the client is still going to earn a rate of return on the full cash value within the policy, but we're just transferring the loan now inside of the policy to satisfy the bank loan, remove the bank and remove Stream from the situation. Now the client would control their policy moving forward. It would look, act, and breathe just like a normal IUL. We always let clients know, especially business owners, if they come into some sort of liquidity event, which you'll see later on, if they come into a liquidity event and they ever wanted to pay off that bank loan with outside assets, that would tremendously help the policy from an income standpoint, as well as just keeping the tax favorable dollars working for them within the policy. I'll show you that on one of the case studies that we're going to go through next. You'll notice here again, age 65, year 26, this is where we're turning on income of that $82,585. Again, they lived to the highlighted line, age 88. They distributed about $2 million out of their policy tax-free, still have about $700,000 of death benefit, all for a total contribution of $125,000. Now I'm going to walk you through one of those liquidity event case studies with a business owner, showing you the beauty of being able to pay off that loan with those outside assets and what that does from an income standpoint. So in this case, it's a 43-year-old male, wants to sell his business in the next 10 years, also wants to maximize the amount of income he can take out of the policy and leave a legacy for his family as well. Again, 43-year-old, originally we designed $50,000 a year, which is column 4 for 5 years. Total commitment out of pocket of $250,000. Bank's going to fund $125,000 for 10 years. Loan payoff in the normal scenario, year 12, we're taking this $1.3 million as a policy loan on the cash value in his policy, and then turning on an income stream for himself at age 65 of roughly $130,000 a year tax-free. So if he lived to age 88, he would have distributed a little over $3 million out of his policy tax-free, and still leave his family with a death benefit of, let's call it, almost 1.2 million. Still a very strong policy. But with selling his business 10 years out, if he took a portion or whatever he got from that sale of the business, already paid the tax dollars on it, and paid off this loan of 1.3 million with the bank with those outside funds, look what it does to his income on the back end, because it leaves all the tax favorable dollars within the policy. His income is going to go from $130,000 a year at 65 to over $306,000 a year at age 65. So think about that loan payoff, almost like he's putting a large Roth cash injection into the life insurance policy and leveraging up that 1.3 million with the outside loan payoff and turning it now into an additional $4 million of tax-free income that he's able to take out additionally over that 3 million originally. And it's going to give him a larger death benefit to leave to his beneficiaries. Pretty significant. Took that 1.3 of outside assets, injected it into paying off the loan, which intact, left the policy cash value intact in full, therefore being able to now distribute an additional 4 million out of his policy and a couple $100,000 of additional death benefit left over at the end. Last case study I'm going to walk you through. This is utilizing a 1035 exchange. So we have a bunch of people that come to us and say, hey, my client has an old whole life policy, really not going to be able to distribute much out of this policy. They're funding it, or they're either not funding it anymore. It's not performing to their liking. Can you take a 1035 exchange into Stream? And the answer is yes. So in this case, we have a 47-year-old male that was currently putting in a little over $6,000 into his whole life policy, was scheduled to do that till his age 100. Not going to be able to really distribute anything out of that policy. It was really just more for the death benefit standpoint. But by taking the $92,000 in cash that he had built up, you'll see that that's going in addition to the $50,000 from the bank each year for 10 years. He's only going to put in an additional $10,000 out of his own pocket. Year 1, years 2 through 5, not going to put in any additional premium. Year 13, again, we're paying off that loan with the bank, but now we're able to distribute a little over $39,000 a year at his age 65, tax-free out of this policy. Again, all for just putting in an additional $10,000 out of pocket. If he comes and lives to age 88, he would have distributed over $900,000 out of this policy tax-free, still having a little over $500,000 in death benefit for his beneficiaries. And again, we eliminated from years 48 of his life all the way to 100 of him putting in an additional $6,000 a year into that whole life policy to carry the death benefit. Pretty significant numbers. Next steps to get started with us. I'm going to email over a link for our training. So before we grant access to Streamline, which is our agent and client facing portal, we have agents and advisors complete a training. It's about 30 different videos that you'll watch. Once you complete that, reach out to us again. We'll grant you access to Streamline, which I'm about to show you right now, where you can run your own cases, create your own illustrations, collect all documentation from the client, and then even apply for the policy as well. One thing we have not touched on yet is how you guys are compensated. One of the ways that Stream makes money is we go on for a compensation split on the application. We go on for 25% as writing agent. You as the agent or advisor would go on for the difference, so the 75% would go paid to you. We're using an early cash value rider on all of our policies, so that does spread comp depending on the carrier that we're using, which currently we can use 2 different carriers. National Life Group spreads it over 6 years, and Symetra spreads it over 4 years. The other way that Stream makes money is we collect $750 as a membership fee for the first 10 years that we're funding. It's baked into the client contribution for the first 5 years, and then rolled into the loan for the remaining 5 years. It's not an additional check that the client has to write. And again, for that 750 or in total over that 10 years, 7,500, what that's being used for is we're setting up a trust that's going to own the client's policy day one. But again, because they're not personally guaranteeing the loan, they're not backing the loan, Stream is going to be the trustee on that trust for the client. Make sure that we're managing the policy year in and year out up until that loan is repaid. We do all of the renewals, all of the paperwork, everything associated with the bank, handle all of the back office work for that. And again, for that, we collect that fee. This is what Streamline is going to look like as the agent view. So you'll be able to log in here. You can see, you can add new clients, you can run new quotes, you can use this estimator tool, which looks just like this. This is not going to run a full quote for you as the agent or the client, but you can do this and show the client while you're sitting with them what it would look like from a tax-free standpoint on how much income they can take out by just entering these 5 pieces of data. This is what it will generate. So you'll see a benefits overview. You'll see the low overview, the leverage versus the income. Then any policy that gets placed in force, both the agent and the client has access to the policy values through our agent portal and client portal. These are updated with live feeds from the carrier. And the most important part, in my opinion, is all of the original documentation that the client signs, the agent signs, and every single policy renewal doc, it's all archived here in the portal for the client. So they never have to worry about losing any of these documents, going back, having questions on anything that they originally signed. Everything is listed here in the portal for them to view at any point. Something else that we offer here at Stream is we don't want you to think that once you complete the training, you get access to our portal, you're on your own. We offer a ton of support. So not just myself, but I have a team underneath me that can help with client meetings. If you wanted to include me on presenting this to one of your clients, I can help you go point of sale. If there's webinars that you want to host for your clients, similar to what we're doing today, I'm more than happy to help facilitate that with you guys as well. Whatever you need from us support-wise, we offer it. We have marketing materials, we have case studies, we host monthly webinars just ourselves as a company as well, where you guys as agents and advisors can join if you'd like. Sometimes we have some case studies that we go through. We change the topics here and there. And then again, support-wise, we have it. We don't charge anything additional for helping you guys. So really, the most successful agents we have working with us really do lean on us for our expertise. More than happy to support you guys in any capacity. If there's specific marketing materials that you guys are looking for that we don't have that you think would help you position Stream, let us know, and we have a marketing director that can put something together for you, no problem.
All right, well, see if anybody else has any other questions. Otherwise, I want to thank everyone again for joining us today. Next month, our third Thursday at 3 will be held on April 16th. So day after tax day, should be much better. And we're going to dive into E4 diversifying your client's taxable portfolio. Keep an eye out for more details in your email and on LinkedIn. And I want to thank everybody again for joining us. I want to thank Richard and Stream for presenting. And yes, if you have any follow-up questions, please contact your RVP at E4 or myself, and we are happy to help you go through the process. Thanks,
Brendan. Thanks, Greg. Thanks, everybody. Appreciate you guys' time.